Hello, everyone. This is Drew from Best of Us Investors, working with Mark on the Platinum trading platform. As I mentioned before, Mark has been in the investment field for over 40 years now and has worked as the director of operation for an online firm for around 10 years. He will be doing overviews on what we saw in the market and charts from the previous week regarding his swing trades, and also share some of the stocks he might be keeping an eye on for swing trades for the coming week. For real-time buy, sell signal notifications based on more than 7 indicators and insights on stocks that are setting up for great trades each day, along with educational videos on how to read charts, come join our Platinum group and let's get through this tough market together, seeking for great swing trade opportunities and even for great potential entry points for long-term investments as well. So make sure you check the link in the description below for the Platinum membership. And I just wanted to remind you that this video is not made for financial advice, but for educational purposes only. So, Mark, how was the market last week?
Well, as you know, it's really, really choppy. We had several economic indicators come out. Target came out, market dumped. The PPI came out. People thought it was cooler than anticipated, so the market jumped. Fed presidents come out, and they talk, and the market goes down. It just seems like the market is waiting for every word to come out from anyone or Fed to show when the Fed is going to pivot and either reduce their rate hikes or eliminate their rate hikes, which I don't think is going to happen because Powell said he's not. But even if we do get a rate hike reduction from 75 basis points to 50 basis points, that's still a high rate hike, and we still have very high rates compared to where we used to have. And in addition, the rate hikes that started back in March, the 25 basis point rate hikes, are just about to come into the market now. So I don't think we've seen the full effect of the rate hikes. So we could take a look at what's going on. So this is just the 5-minute chart of the week we're currently in. And at the moment of this video, we're not quite closed yet in the week. This is 5-minute chart. This is Monday. You can see we came and we had some news, brought it down, and then we had the PPI come out, and you see the market came up. And then we probably had some Fed guy come out, and the market goes down, and then we've come back up. And that's just Tuesday alone. You can see the volatility. And Wednesday, we started out going down. Thursday, I think this is where the Fed chairman came out, or not the chairman, but one of the governors came out and talked about we might have to go to a 7% interest rate. And then we came back up and then closed a little bit higher. And then today you can see we closed up. We had some retail news come out that seemed to be good, but now we're trending back down. The market's not closed yet, but there's just every time someone comes out and talks it, we either have an up or a down spike. And it just doesn't seem like we're getting anywhere right now until we resolve this issue. Interest rates are still up. We have an inverted yield curve. Housing prices and housing market seems to be going down. We're starting to see some layoffs in the high tech and other companies. So, it's a good time to be a swing trader because at least we have some charts to help us out and know when to get in and out of trades. Okay, so this is Baker Hughes, and we're just going to go through a couple charts that we had. Baker Hughes, we got in on the 7th of November, right at this point right here. And we got in about the watch list price was $29.32, which is this white line right here. And you can see over time, as we gone through, we got out in about 2 lots, and you can see we got out at this point, and we got out up here. So the next day we got out, and then we came back, and as the market came down and it started to touch the 9-day simple moving average, that's basically when we got out again. We were totally out of this position. This was yesterday, and this is where we are today. So our average price, we got in at $29.32, and our average price of getting out was $30.92. So we were up 4.44%, or about $130. So we got out on an average price of $30.92. Today it's trading at $29.03. So that trade went pretty good for us. Okay, let's move over to General Electric. On the 7th of November, we put this stock on the watch list. You can see right here, this was our watch list price where the white line is. That was at $81.21. We eventually sold this position over 3 lots with an average price of $84.21. So we were up about 3.7% in 10 days, which would have made you on a 100 trade lot about $300. Now the price, you can see, is 85.07. So it's a little bit up from where we were. We got out when we started crossing the 9-day simple moving average. And you also saw down here a cross on the slow scholastic, and you saw a cross on the MACD. It's since still bouncing off the 9-day, but I'm glad we got out. We could have stayed in this trade because this wasn't a full candle close underneath the 9, but I'm risk adverse. So I will take my money and take it and get it ready for another trade. So this is JBL, came on the watch list on basically the 14th of November, you can see, and we bought it at $65.68. This one has kind of less volume than I like to see, so I didn't want to stay in it too long if I wasn't getting good price action. And we saw down here that we had a crossover basically of the slow stochastic. And at that time, we chose to get out of this position. Now we got out at $66.22. Now you can see the price has gone up to 68.25. So we got out a little early. Here's where we got out on average. And you can see the price action has gone up. But we did manage to make about a 1% profit, or $29 in 3 days on this share. But again, this did not cross below the 9-day simple moving average. So you could have stayed in this position and still had this gain going. Again, I'm more risk averse. When I see something like this, that tells me I may want to get out. I got fooled this time, and you can see that the MACD is still rising over the signal line. But we made money, and we'll let this trade go behind us and learn from that. So here's a net list, and we got on this position basically on the 14th of November at $290. And you can see it popped up really well, at which point we took a half a position off at this point here. We ended up taking 2 more positions off. As you can see, price action started coming down, and here's yesterday when we got out of this trade, coming down to where we bought in at it. I didn't want to go below that and take our profits. We ended up making pretty good. We sold 3 lots, and the average price was $306. So we were up 5.5%. And if on a 100-share trade, that you would have made $1,125 on this trade. And now you can see it's at 287. So we got out at 306. We bought in at 290, and it's at 287. So this was a good swing trade for us. You can see that the MACD is rolling over below the signal line. You can see it across here of the slow stochastic, and you can see the momentum line of the RSI is going down. So in this case, this worked out for us really well. Okay, this is Moderna, and this is just one of those trades that just goes well for you. And this one did. We put this on the watch list on the 8th of November, and we got in at $162.46 on a 100-lot trade. We sold this basically. You can see that we were doing sideways movements, and then on this day here, some news came out about Moderna and I believe it was a COVID drug. It's totally unrelated to our technicals, but it popped it all the way up, and you can see we hit this resistance line, and we started selling half of our position right here when this wick came up and hit resistance, and then we sold the other half. But you can see over the last 4 days, when you hit resistance lines, it can go sideways for a while, or you can stay in too. I'm risk averse. When I hit these and I make this much profit, I usually get out, but we're still above the 9-day. We're still above the 20-day. We're still above the 200-day, and you can see the 50-day moving up. Here's where we got in at this point here. When we go down and look, you can see we're starting to see a rollover to the MACD. We also have a flat signal line with the slow stochastic, and we're seeing a little bit of roll over the RSI, but this was a pretty good trade. We got in at $162.46. We sold out in 2 lots, so 50% of our lot each. At an average price of $180.15. So on average, we were up 10.89% in 7 days. If you had 100 shares of this, you would have made about $1,169.50. So we got out at 180.15. We're now trading at 182.66. So we're under a little bit, but that's okay with me. I'll take an 11% trade any day in 7 days. So this is one of our rare few losses that we got out of. But the nice thing about swing trading is you can get out before you have too much of a loss. And now this is the XLF. This is the Financial Services Sector Spider Fund. Okay, it's an ETF. So we ended up getting in this position on the 11th of October at $35.70. And you can see it went sideways. This is the line where we got in, and it went sideways for several days. And then it went down. It hit the 9-day simple moving average. And at that point, I was also seeing a crossover on the slow stochastic down here, and we were seeing a rollover on the MACD, and I thought, well, that's just not going to do us any good. So we got out at this point. You can see today We're still not up, but this helped us to get out of this position. We closed out at $34.87. We were down on this trade $2 or 2.32% or $83. So now you can see we're trading at 35.18, which is still below where we got in at 35.70. So the nice thing about swing trading is it helps you get out. We're only down 2.3%. We're up pretty good on this week, those last 10 days on our other trades. So this is one I didn't mind getting out of. So if you look at it for the week, for all these trades together, had you done trades, paper trades on all these positions as we had put them on these charts, we would be up in 100 lot trades on each one. We'd be up about $3,270 so far. We're now no longer in any trades at this point. It's Friday, and I don't like to hold trades over the weekend that I make on Friday. So that's what we got for today, Drew, and we're not in any positions right now, but I'll go over some screeners this weekend and see what the market does today and see what setups it provides us for next week. And if we find any good setups, we'll put a couple on the watch list. If we don't find any setups, we let the market come to us. I'm not going to push this on anyone to have bad trades. That's how we make our trades good, is by having proper setups. So there's some times where we won't even be in a trade, or it could be a period of a day, or it could be a week, could be 2 weeks. But we'll see how this goes. With the market being this volatile, we'll try to find a trade for next week.
All right, so thank you very much, Mark. Again, I'm always impressed to see your chart analysis and know that we can even make money through swing trading, even in a market that's going down. So again, thank you very much. And I also want to thank you for listening, and I hope you all enjoyed this episode. Now, for more details and updates regarding swing trades and chart analysis each day, make sure you join our Platinum group. And again, let's successfully invest and make it through this tough market together. Again, this is not financial advice, but for educational purposes only. Thank you very much, and see you all next week again.